Year to date, Tesla has dropped by more than 50%, which leads to many people wondering, is Tesla cheap to buy now? Can I all in my money into Tesla, and when it goes back up, I will what big? Yes. Wait. Just before you think I'm trying to convince you to buy Tesla for the 100th time, I'm not. In fact, I will do the exact opposite in this video and tell you all the possible risks that Tesla may face. And yes, in a way, I'm trying to spread some FUD here. Also, I will share my valuation on where Tesla will go by 2030 and what's the fair price for Tesla right now. Okay, with that being said, let's start with risk number 1. Tesla is overpriced. I'm sure both the Tesla bears and the bulls agree with me on this one. Tesla is indeed overpriced. Even after falling by more than 50% this year, Tesla is still trading at 56 price to earnings ratio. To put it in context, other car makers have way lower PE ratios. Toyota 11 PE, Ford 6 PE, GM 7 PE, Volkswagen 4 PE. So Tesla is 5 to 12 times more expensive than other automakers. But Tesla is more than just a car company. It is a technology company. Okay, yes, I totally agree with this. So let's value it like a technology company then, and compare it against other technology companies. Apple 25 PE, Google 20 PE, Microsoft 26 PE. Only Amazon has a higher PE than Tesla. But then, Amazon is dominating in multiple industries. It has the largest market share in cloud computing, and it is leading in the US e-commerce space. So, as you can see, even as a technology company, Tesla is still at least 2 times more expensive than a normal tech company. Also, I know that there's the argument that if Amazon consistently had a high PE in the past, then why can't it be the same for Tesla? For that, I will say, look at the years where Amazon had a high PE ratio. It was after the 2008 Great Financial Crisis. The world had just come out of a very bad recession. There was easy monetary policy, and it was party time for the stock market. That's why Amazon had high PE. Now, with the recession coming, high inflation, high interest rates, Tesla would have a hard time justifying such a high PE. And also, 85% of Tesla revenues come from automotive sales, which means that right now, Tesla's stock price is pricing in a lot of things that have not happened yet, like a consistent 50% growth rate, 20 million cars by 2030, FSD, energy, and AI robots. When you are pricing in perfection, there's little room for error. If ever Tesla under-delivers, the stock price will fall by a lot. Or like what Elon says, the stock will get crushed like a souffle under a sledgehammer. Quick pause. With Moomoo, you can now easily keep track of your favorite company's portfolio. Here's how. In the app, go to Markets. Scroll down a bit and you will see Institutional Tracking. Here, you will see some familiar names like Warren Buffett Gong Gong Berkshire Hathaway and Kathy Mama's ARK Invest. Then, if you check them out, you'll be able to see all their recent purchases and portfolio. So, because Moomoo is celebrating their 10th anniversary now, if you sign up using my link down below, deposit any amount, you will receive $10 cash. Invest $100 into Moomoo Cash Plus and you will get another $20 cashback coupon. And deposit $2,700 or more to receive a free stock worth up to 1 free Apple share. This deal is only available for a limited time only, so be sure to get it before the offer ends. With that being said, let's get back to the video. Second risk, competition. If you look at the charts of Tesla's deliveries and revenue, it looks like those perfect growth charts where it's going to the moon. Part of it was due to all the innovation that's going on. But the other reason for the fast growth is because there wasn't anyone there to challenge Tesla. That's why Tesla has been dominating in the EV space over the past 3 years. But now, competition has been slowly catching up. Remember, we used to laugh at legacy automakers like Ford and GM getting left behind? Well, they are trying to catch up now. Ford is spending $50 billion on EV research and development, while targeting an annual growth rate of 90% till 2026. GM is investing $35 billion on EV R&D and expects to compete with Tesla in 3 years' time. Meanwhile, BYD is winning the EV race in China, and there are more car models popping up. With enough competition, Tesla may have to either come up with a budget model or further cut their car price in order to boost demand, and that will affect their profits. Now, you can say that even though Apple has a lot of competition, they can still increase their phone price. Here's something to consider. Many people compare Tesla to Apple, where the biggest moat is brand loyalty. However, for Tesla, this moat is weak because while Apple has a switching cost, Tesla doesn't have. For example, Apple devices work very well with one another, and once you start using Apple products, you are more likely to keep using their devices. But for Tesla, there's nothing stopping us from changing to another better, sexier, and more attractive car. So it's hard for Tesla to justify a higher price when there are lots of competitions out there. Also, because Tesla's patents are open, Tesla competitors will have an easier time to copy and learn from Tesla's successes. All these are just cars, the hardware stuff. For software, even though there isn't any Apple car yet, Apple is coming out with their car dashboard, and same for Google. And because both Apple and Google have a big user base than Tesla, if they did succeed in entering the EV software industry, they would easily beat Tesla. Okay, how about full self-driving? That's Tesla's trump card, right? There's a lot of competitions here too, like Waymo, Cruise, Mobileye, and so on. And some of them have already deployed their robotaxi service. Waymo recently came to Los Angeles. Baidu is currently running robotaxis in Wuhan and Chongqing. So yes, even though the competitors' autonomous miles driven is still way behind Tesla, given enough time, they will catch up. In short, even though Tesla is winning the race now, competition is a real risk to Tesla in the future. Third risk, Elon Musk. Yes, I know about the whole argument about Tesla can run by itself without Elon Musk. And that's true. Even when Elon is busy elsewhere, Tesla found a possible new location to build their next factory. China-made vehicle sales hit record high. Tesla released FSD beta to everyone in North America. But the reason Elon is a risk is because he cannot control his mouth, or rather, his tweets. For example, he proposed Ukraine to give up territory to Russia, Taiwan to let Beijing control a part of them, asking his followers to support the Republican Party, accusing SBF of bribing the media, tweeting about a conspiracy theory about Paul Pelosi. And best of all, he tweeted all this in just these 2 months alone. He kind of reminds me about the time where Donald Trump was free to tweet whatever he likes, and that caused a lot of backlash, resulting in Donald Trump getting banned from Twitter. And when you have Elon Musk, this super influential rich guy going around tweeting whatever he likes, there's always a tiny chance of saying something wrong and pissing off someone powerful, or even worse, a country's government. They could retaliate by banning Tesla from their country, causing Tesla to lose a lot of market share. Or maybe Elon gets POFMAT and jailed for spreading lies and rumors, which would be also bad for him and Tesla. Next risk, recession. Okay, I have to admit that Tesla is well equipped to face a recession. Their operation is very efficient. They have low debt, tons of cash, and they have already laid off workers to prepare for the downturn. And the demand is still very high for Tesla, despite the looming recession. But the risk here is not for Tesla, but for you. Yes, you, a toxic bull, I mean Tesla investor. Since the start of the year till now, Tesla has already dropped by more than 50%. And that's just due to the Fed increasing interest rates. We are not even in a recession yet. Many experts are expecting a recession to come. And if it comes, Tesla's business will be affected in some way or the other. Like maybe lower demand, higher material costs, Tesla laying off more employees, And guess what will happen to the stock if they start to underperform? Yes, that's right, the stock will jibaboom. With Tesla stock being Tesla stock, I wouldn't be surprised to see the stock continue to drop below the current price, all the way below $100. While this is just your usual short-term fluctuations, if you are trading margin on Tesla or investing more than you can afford to lose, like those who are investing more than 80% to 100% of their portfolio on Tesla, it will be super bad news. So if you are investing into Tesla, you need to be prepared to see further decline on the stock for a long period of time, yeah? So those were just some of the risks of investing in Tesla. Take note, yeah, those are just risks, yeah, they may or may not happen, yeah. But if you were to ask me what's my target price for Tesla by 2030, here's a very simplified way of calculating it. First up, vehicles sold. We know that Tesla aims to produce 20 million cars by 2030. But I'll be super conservative and say Tesla only sells 10 million cars by then. And that isn't hard to imagine, as Toyota, the world's largest car company, is only selling 10 million cars right now. The average selling price of a Tesla car is around $54,000. But let's assume the worst case scenario and say Tesla lowered their average selling price to $45,000 in order to fight with competition. This means Tesla is earning a $450 billion automotive revenue. Right now, automotive sales contribute 85% to the total revenue. So I will assume this percentage remains the same. That means no robotaxi yet, no Tesla insurance yet, no Tesla App Store yet, no AI bot yet. Their total revenue will come out to be $529 billion. Tesla's current net margin is around 15%. So I'll just use that. The net income will come out to be $79 million. Divide that by the total outstanding shares. Tesla's earning per share would be 23. As for the PE ratio, I will use a super conservative number here, 25. That would mean by 2030, Tesla's stock price will reach $572. Discount that by the 20% growth rate over 8 years. That means my fair price for Tesla in 2022 would be $133. $133 may seem low, and that's because I'm factoring all the risks that I mentioned just now. Tesla being overpriced, lots of competition, Elon Musk overpromising and under-delivers, and a prolonged recession. All this could happen in a worst case scenario. But otherwise, I could be wrong and Tesla could go to the moon. In that case, what ah? Anyway, that's all for this video. Hopefully, this helps you out. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.